Ladies and gentlemen, boys and crabs, I'm here with the man, the myth, the legend, the Yeti of the metals community, so elusive with his wisdom, Chris Vermeulen, coming up right now. International Stacker. Hey everybody, I am back here with Chris, and I would say his last name again, but I keep butchering it. I'm so sorry, my friend. Thank you for coming back to my channel. Here with the man, myth, the legend. Not only is he an expert in technical analysis, but ladies and gentlemen, he's like you and I. He is a stacker. He is a stacker at heart. He might not claim it. He might not put it out there, but he is a stacker. He's been involved in the market since 97, founder of the Technical Traders. He's been all over the place. And when I say that, I'm talking Futures Magazine, Gold Eagle, Safe Haven, The Street, Kitco, Financial Sense, everything that's out there. You will see this man. Chris, welcome to the channel. Thank you so much for joining us today.
Yeah, thanks for having me back on.
So can you just give a quick, like a 60-second, who you are, what do you do, and why did you start doing what you do?
Sure. So I am a full-time trader and investor. Been doing it since 1997. I fell in love with technical analysis, which is following price on charts, ignoring all the fundamental economic data. And so what I do every day is do analysis on the charts, and the charts typically point to where they're headed next. And so with analysis, we can follow price, because the only way we make money as traders or metal stackers is when price moves in our favor, which is to the upside. And so I like to know when it's going to have a big move, when it's going to potentially trade sideways or pull back. And that's a time to trim positions or just mentally be prepared. And so I follow the charts and stocks and commodities across the board, simply following the price of the underlying asset class. And I provide that more or less each day to subscribers who follow my newsletter, so they get an understanding of how the markets move each day for the week and where we think they're going over the next week, month, 2 months into the future. So pretty straightforward stuff when you get to ignore the fundamentals, and a lot of the technicals are sort of the economic data out there, because there's so much noise out there right now with elections, stimulus. I mean, it can pull you off your game.
Right. No, yeah, totally. We are definitely going into crazy times. And, I think a lot of stackers, including myself, are not too much into the markets, because we look at that, as being manipulated. And, we believe in having physical gold and silver to fight inflation and be a hedge against, inflation, preserving your wealth. And the thing I like about you, which I think a lot of the viewers liked last time, because I got a lot of great feedback last time you were on the channel, is that not only do you look at technical analysis, but you are in fact a stacker. You were trying to eat 1,000-ounce bar, I think, last time we were on together. No, but ladies and gentlemen, he is a stacker. He's the only person I've seen in talking to that has multiple 1,000-ounce bars. He believes in metals, but also he knows the sandbox we play in. And what do I mean by that, folks? Even though you might think the market is manipulated, which I do, and even though we might think that, it's not tangible, we can still use that resource. We can still use that information to look at what we think metals are going to do, to make smart decisions and increase our physical wealth. And, the market, folks, is what sets the spot price for silver and gold. So for me, I'm all about having more tools in my toolbox and more arrows in my quiver. And I think your service, Chris, not only being a stacker and getting that information out there, but teaching people how they can look at the markets and how they can use that information, to increase their stack and increase their wealth.
Yeah, for sure. I actually just did a big talk about the super cycles for commodities. It's like a 20-year super cycle. The last one was in 1999. That was the low, and we're starting a new super cycle. So it's really exciting where we're coming in for precious metals. I know a lot of people weren't into precious metals back in 99, 2000, because it was totally out of favor, and it wasn't a hot commodity back then. And that's, believe it or not, even though gold prices are up dramatically since then, we're actually just starting another more or less 20-year super cycle. So in reality, that means the next 5 to 8 years should be explosive. It'll be a wild ride. It'll be a little choppy for the next couple of years, I think. But overall, man, we are about to experience a super cycle that really, if you're lucky, you catch one in your lifetime, because generally it would be luck. if you follow the markets, you can catch 2 or 3 of these through your entire lifetime. And I mean, they're life changing. So we're just
Woo!
getting into that with precious metals over the next 1 to 3 years. The super cycle will kick into high gear.
I'm ready for it, man. I'm ready for my life to change.
Totally.
So, when you mention commodities, obviously gold and silver are not only have thousands of years of monetary history, they're also considered commodities. And there's other type of commodities, right? Like oil and grain and these types of things.
Yeah. So when I'm talking about a commodity super cycle, it's actually for the basket of majority of commodities. I mean, right now we are in the everything bubble but commodities, technology, tech stocks. Everyone's into equities, stocks. They're all into real estate, and the general public is not even thinking about precious metals. I mean, we think about it all the time. We're in this circle, so we kind of think it's popular, but the reality is no one's into it.
Right.
Rick Rule talked about, I think the average person has something like 2% of their portfolio has metals if you were to net it out over everyone. And he said back in the 80s when gold was at like a major super cycle high, everyone had something like 8% or something like that. So
Wow.
we're a long ways away from it being a really hot commodity. So you could just imagine seeing gold, silver take off, 2, 3, 4, 5 times its value, and then add in the parabolic euphoric stage where people chase it and you get
Oh, yeah.
more extreme pricing short term to
Woo.
the upside. So there's a lot of exciting things going to happen, but it's going to take several years to play out. But as stackers, I mean, we just like looking at our piles and knowing we've got a security net and that it potentially could be worth a lot more down the road. So who cares if it takes 3 or 5 or 10 years? The key is we're in it. We hold a lot of metals, and it's exciting.
Now, very, very quickly, I'm going to ask you about the outlook on gold and silver. But first, I have two questions for you. So the
Mhm.
first question is, so if silver goes to, just I'm throwing a number out there. If it went to $100 an ounce, a troy ounce, is it really worth more, or is it just correcting for inflation? That's a conversation that's had a lot in the stacking community. Like, if gold goes to 3,000, is it worth more really, or is it just accounting for the years of the decline in the buying power of the dollar?
Yeah, it's interesting because if you look at gold, if you factor in inflation adjusted pricing, gold in 1980, it was in 1979 or 81, somewhere in that window there. Gold was actually valued at $2,265 if you factored in for inflation. So believe it or not, in the U.S.
Oh.
dollar right now, the gold hasn't made new highs in terms of its actual buying power.
Mm.
So silver, I didn't actually look at the difference for silver, but I know silver, I think, is actually made newer highs back in 2011 from back earlier in history. But I do think it's going to be a mix. It'll be playing catch up simply because of inflation. It'll be trying to get back there, but there's going to be this huge flood to a safe haven, to a physical asset versus all these currencies that are really just fiat and are more or less worthless. If people give up hope on them, they have zero value. So it's going to be a mix of both. Overall, the key is to make sure you've got some. And if we hit that $100 price level or beyond, I mean, you do need to be taking some money off the table, because every hot sector, every hot stock and commodity will go out of favor someday, and it'll be out of favor for a long time. Commodities are big, slow cycles. They're usually dormant for 10 or 20 years, which is why these super cycles are so powerful. So if we get this big rally over the next 3, 5, 8 years, and we get these lofty prices, it's actually time to be trimming off and moving out of it, and knowing you locked in, money, preserved capital, and you can rebuy it most likely several years down the road at a much lower price.
And you hit that nail on the head. Although I feel the use case for metals is primarily preserving your wealth, preserving your buying power, it's when you have everyone rushing in, that euphoric rush into there that happens, very rarely.
Yeah,
That is the opportunity to actually make gains and make that extra, fiat currency or
for
paper or
sure.
whatever you think it is. So,
It actually becomes, that's the point where it gets
yeah.
overvalued, and it's kind of where the stock market somewhat feels like now. I mean, the earnings and the valuations are just, everyone's been piling in this year in the States, like tens of millions of new traders piled into the stock market, and they're just driving prices up. A lot of the leading fund managers and leading financial guys are saying, it seems like all these new traders are just buying, driving the prices higher. And so we could be at this lofty price in stocks, which eventually there's going to be an overvalued lofty price in metals like we saw in 2011. So when we see those euphoric stages, that's when you've got to start saying, hey, I might start selling some of these 1,000-ounce bars.
Yeah, before they break your back. Now, silver, physical silver, and physical gold, folks. If you've never held it in your hand, I mean, it is like a connection to the last couple thousand years of human history when you touch this stuff. Now, Chris, so you got involved in markets in, I believe, 97. And correct me if I'm wrong. When did you get your actual first like physical piece of gold or silver? When did that happen?
First physical piece was probably in 2014. I think is when I bought my first bars. I'm a bar fan. There's something about having a gold bar and a silver bar.
Yeah,
I don't know what it is, but I just love bars. When you pick up a bar, it gives me chills. I'm like, oh, I love it.
No, totally. And I just remembered a topic we are talking about earlier. I had actually made a video talking about silver and correcting it for inflation, and silver corrected for inflation has already been triple digits, based on the math I did. Now, I'm not a math genius. I could have messed it up, but based on the math I did, silver had already been in triple digits, which is why I think it's not unrealistic to see that again. So building off, and you know what, Chris, I got a question for you, man.
Yep.
So I've had a lot of viewers reaching out to me. One of them, shout out John W. They love your stuff. They're lurking on your channel. The Mega Gauze coming, folks. I'm giving away not only this kilo, 32.15 ounces, not only this piece of silver from Yankee Stacking and Silver Dragons giveaway they had done, and I acquired this, but I'm giving away over 70 ounces of silver and some gold. Chris, I'm getting nonstop requests from the Crustacean Nation. Would you be willing to sprinkle a little of your greatness into this Mega Gauze?
Sure. Yeah, let's do it. I mean, you're giving away a kilo bar of silver at the end of this month or November?
Yeah, so it's the 31st it stops, and then I got to bring up my calendar. Where's my calendar over here? The actual date is the 1st of November, 2 days before the election.
That's awesome. Yeah. So I'll give away like a quarterly subscription.
Woo!
Which is about $250 value.
That's awesome.
I guess, I don't know. How do you want to do it? Do you want to draw two people? One person wins your silver bar, and the second person wins a subscription. That way it spreads the wealth a little.
Yeah, definitely. So I'll make it a separate, like a prize. So I have pretty much right now, I have about 5 prizes I'm drawing from the entries. And then I'm giving away a bunch of silver and gold live in the chat. So I think we'll make your subscription one of the drawings that somebody can win. So that's awesome. Cool. Yep. Well, thank you for that. I appreciate that. And whoever wins it is definitely going to appreciate it. And remember, ladies and gentlemen, if you win the subscription and you make $10 million, you owe me a 10% GAW tax. No, I'm kidding.
1,000-ounce bar of silver. Just take that.
1,000. Now, you asked me about this claw. Shout out to the Crustacean Nation. If you're new to my channel, it's a meme. It's crazy. We all have crabs, but not the bad kind, the good time, Crustacean Nation. So thank you for that, Chris, and shout out to the Crustacean Nation. Let's get into it, man. Can you pull up a silver chart and tell us what the heck is going on?
Yeah, let me pull that up here. Silver, here we come.
What software is this you use, by the way? This is great stuff.
I use eSignal.
Okay.
Yeah, it's a little pricey, but I like it. It's colorful. It's easy to use. It's pretty straightforward. So this is the daily chart of silver. I'm just going to make it a little bigger here. And I'm going to zoom out a little bit more. More or less, silver broke out earlier this year. This is where the kind of silver had this initial break, and it started to pick up speed. And then it broke its 2016 highs. Way back here. And this was the final line in the sand. This is where we saw all the big long-term short positions, like the COT data, commitment of traders. This is where like JP Morgan, they all got caught on the wrong side of the short, and it just created this massive short squeeze in this move up. Now, you want to know where I think it's going in the short term and the long term?
Yeah,
So
because Chris, I'm still waiting for my massive pullback. I wanted $20 again. I need to I need to load up.
hey, we're getting there. We're actually we could see that, believe it or not, depending on how this market unfolds. So if we were to just look at this chart, there's a couple different time frames, and this is where people need to understand, because I can talk about a bull flag here and say, hey, I'm bullish on silver, and then I'll say this also looks like a bear flag, which is short term, not long term. So
Mm.
you got to make sure you understand there's different time frames here. So let me just draw on the chart. A long story short is we got this massive bull flag forming in silver.
Mm.
A bull flag points to much higher prices. A bull flag is the halfway point for the next rally to the upside. So we can see a substantial move long term. Now, keep in mind the short term price, these red bars, this nice drop that we saw, we are seeing a bear flag. So you've got a down move, a sideways bear flag. And of course, that's the halfway point. And if we were to use technical analysis, I drew this already on the charts, but we've got a downside target of 2090, and then all the way down to 1860, potentially for silver to pull back, which happens to be using Fibonacci extensions. It gives you the current momentum. The crazy part is both of the 618 and the 100% measured move both happen to fall in line with the mega bull market kind of breakout in the initial short-term breakout area where a lot of people chase prices up. So everyone who got in from this point up will then be underwater over here and panic out. And that's what puts a bottom in the market. And that's when I think we could, that's when we're going to get that opportunity that you're talking about, that big pullback. I mean, we have had a big pullback, but there's potential here for it to come down to this $18.60, $21 range. And that would still be really bullish. And it would be a killer opportunity to go out and buy some bars.
Now, Chris, I did notice you said mega, and ladies and gentlemen, the mega ga is coming. Thank you, Chris, again for throwing into there. But question for you. So for those people who might not be really familiar with this, when you see pullbacks in the market, some call it consolidation. That's actually a healthy sign, correct?
Yeah, you and I talked about this on our last call. So more or less, you want to see the stock market kind of stair step its way up. You've got a step up, and then you've got the step. And it usually the step, which is a bull flag, consolidation, correction, whatever you want to call it, it usually tapers down against the underlying trend. So if the previous run is up, that's what creates the move up, the flagpole, and then it flags down in the wind against that trend, and it's a bullish sign. And then eventually you're going to get another flagpole up on the chart, and then it'll flag out. So we've got some pretty good upside in silver. If I was to draw some analysis on here, give us a quick target of the upside, I'm going to go to the weekly chart just to get a little crisper view here, if it will load.
Now, while this is loading, I look heavily into, my expertise, which is geopolitics, issues around the world. How much of an impact do you think, like for the presidential election, without getting political, if one candidate gets it versus another, in your opinion, does that have a pretty big effect on the markets, or is it all pretty much baked in already?
To be honest, I'm not really sure. I'm not huge into politics, and I don't know how it's going to play out. And the reality is, I don't think anyone really knows. You never know what people are going to think or do when it actually happens, and if it's
Right.
a surprise versus this. Most people already feel as though it's in one direction. I don't know. I don't really stick to trying to front run news and election stuff. All I know is you need to be protected at a time like this. It's going to be volatile, and just expect big moves after it. And when the moves start, they're probably going to have some pretty big legs, power behind it. So if it starts to rally, you want to make sure you're in. If it starts to crash, you want to make sure you're out or short so you can make money from a falling market. So that's kind of where we're at. Now, let's just jump to this weekly chart. We'll use Fibonacci extension. And we'll get into the details, but more or less, Fibonacci is a number sequence that's used in almost everything. I mean, Mother Nature, flowers, you name it, it just works. And it's the same with the charts. People's psychology, their sentiment, their emotions, everything kind of works around Fibonacci. So if we were to take some price targets on silver, depending where we want to go, I try to negate this pandemic crash, because to me that was forced liquidation. It created a blip based on news or an event versus raw price action. So I'm actually going to go to this more conservative pullback. And what you do is you draw from the bottom line, you draw to the rally. That's the impulse move to the upside. And then you can come down to where the low is, and it'll tell us where the next upside target is. Now, if this market is to start to rally and break out from here, we are going to see silver head towards $37 an ounce into the year end. Now, if the market ends up correcting all the way down to this more or less this 2019 range, we would actually pull this down to the 2019 range because that's where the low would be. We'll go 19. It's kind of in the middle. And so it gives us an upside target of around $34 per ounce. And based on the amount of months that this ran up and the multi-month consolidation, this is telling me that we're probably looking at a 3 to 5 month window that this could play out and then rally up to get to this level. So we'd be like early next year, first quarter next year, we could be rocking into these prices. And I covered this in a super cycle presentation about a week and a half ago. And what's interesting is if you look at seasonality of the price charts and what happens during election year, what typically happens going into the holiday season to more or less New Year's, and then the first few months of the year, we're actually very much in favor for this market, for the metals market to start to perform well and potentially rally all the way into March. So this pattern here is actually really signaling a nice pattern. We could have a very big run, but just know it hasn't broken out yet to the upside. It's still in a downtrend. You could draw some different types of analysis lines on here. You could go from these extreme highs. You could go from closing prices. Anyway, the point is we're not breaking out when we are in a downtrend, which is the definition is lower highs and lower lows. That is a definition of a downtrend. So this market could still really kind of, have another waterfall sell off. It'll be a great opportunity, but we're looking at $34, $36 an ounce, hopefully in the next few months. But we may get a crazy opportunity down here to add after this second wave of the second half of this bear flag plays out.
Now you're saying the next couple of years could be pretty explosive, being in the super cycle. Like, what do you think could happen like over the next couple of years? Like, what do you think the ceiling looks like? Not taking into account like maybe people just being emotional and piling in. Like, what do you think would be a number we could be seeing? Now, folks, he's not a fortune teller. He's not he's going off the numbers. So don't, this is his best estimate or guesstimate based on what he sees. So please don't protest in front of his house if it doesn't hit these numbers. But what's your prediction, Chris? What do you think it could get to just looking into the future?
Right. So just to be clear, I don't think it's going to be a straight run and a big rally up there. I actually think we're going to see metals perform well over the next 3 to 5 months. And then I think they're actually going to fall out of favor and they're going to pull back down substantially for 6, 8, 12 months. And at best, I think late next year is when they start a major run to the upside. And that's when the super cycle will actually to me, will have bottomed and we'll be starting the next big leg up without having to endure like some type of big drawdown. So I think we're still going to have a little bit of weakness next year in these. So the super cycle, looking forward 3, 5, 8 years, you never know how quick price is going to get there. A lot of times, believe it or not, the bull and silver bull markets only last a couple of years and they go very quick. So it could take a while to build the base and then take off, or we could see it just explode in the next few years. But next major upside target late next year will be around 2,700. And then from there, there's going to need more time to mature, but then we're looking at 34, and then it goes up to 7,200 this is for gold.
Right.
Silver, we're looking at 34, 36 range, which I just showed you. That's kind of the shorter term. And then longer term, we're looking at like 51 and then like 83. And then it gets up 120 type range. So I don't know how they're going to explode and what's going to unfold to trigger those. But they definitely look great long term. But I think there's going to be some great opportunities over the next potential couple of weeks to maybe buy on a dip, or later next year. I think metals will still be trading sideways. That will actually be building a very strong long-term base, a pattern that points to much more sustainable, higher prices long-term. And so as it's building this base, that's a point where you can, just accumulate a few more bars and rounds here and there, and just let it mature. Eventually it should break to the upside, and this super cycle will carry over where people want physical commodities, and equities kind of fall out of favor. But it takes a long time for these major trends to change direction. So that's going to be a few years.
And you touched on something, Chris, that I think is important, because I have a bunch of people, especially during this last run up, messaging me, is it too late? Can I still get in silver? Should I, take out a short-term loan? I think what you highlighted there is that there's still time for people to get in. And, when people ask me this, I say, hey, be smart, buy the dips. Don't let your emotions take over, because I've seen comments where people are saying, I'm just buying everything I can, into a run up because it's going to be worth 100 in a year anyway. And to me, that's like a dangerous attitude to have. I'm always buying it as low as I can, dollar cost averaging. Do I think it's going to have a huge upside? Yes, but I want that upside to be larger, and I also want to be protected in case I'm wrong.
Yeah, for sure. I mean, when you look at, have you missed out on it? Sure, you never got, the average price somewhere back in here around 17, $18, whatever that average is. It's had its first move to the upside, but when this futures chart doesn't go all the way back there, but the last super cycle started way back over here. And you can see how it lasted huge for the first more or less 10 years. And now we're back down, and we're just starting a new super cycle. I think we've got lots of potential to the upside. Really, this is the first rally and pullback in silver. It's kind of hard to see. The chart's very squished, but this is the first breakout and pullback. And I think gold actually shows this maybe a little bit better. So so gold had the massive run up, eventually got overvalued where everyone piled in. You could, hawk your necklace at any given store, variety
Yeah.
store back here for gold, change your gold for money, right?
Yeah.
Same as what Bitcoin was like.
Yeah.
When we get to one of those euphoric stages, the next time we do that, we're probably going to see gold like, 34, 70, 200. That's kind of when I think that type of crazy euphoric kicks back in. But the key is, this is gold broke out last year from this blue line, this big basing formation, and it had its first pullback. And silver is right here on its first pullback. The first pullback in a new bull market is one of the best times to get in. You're buying something that's got confirmed upward momentum. It should have upward momentum for several years. And so buying this pullback that we're in right now is perfectly normal. You have not missed the boat. You're actually getting in a time that instead of buying anywhere down in here and holding for years and years and years, wasting all that time for your money to be tied up, you pay a little bit more, but you get into something that should continue to rocket and put your money, make it more valuable very quickly, immediately, versus trying to pick a bottom and waiting years because it hasn't broken out, right? So silver is in this stage. Gold miners are in this stage. If anyone trades equities, gold miners have got a huge potential move. Obviously, they're leveraged play on metals. So it's really exciting, and it's not too late to get into metals. I think with what's going on, I think everyone needs to have some physical metals just because of the currency and the global crisis. And I mean, the concerns just keep ramping up, right?
Right. And especially stackers, we're really hardcore about metals. And, we don't even like calling paper currency money, right? Because money, to be actual money, has to be fungible, divisible, has to have a, store of value. So we look at like the fiat currency or the paper currency as a way to take our actual money and transfer it maybe into different commodity, different physical metals, stuff like this kilo that I'm giving away to somebody watching. So make sure you enter the mega. So that's kind of our outlook on that. What's your thought about that, that type of philosophy?
I get it. It makes sense, but I mean, I still think about it the same way. It's not really real money. I mean, it only has value because people believe in it, right? Just like same as Bitcoin, more or less. It only has that value, but I don't know. I still look at money. If I got $100 bill, I say I got money. But
Right.
I get the theory. I mean, if I can still trade it and buy something with it, it has value. It's a currency. Anything's a currency. Jug of milk's currency,
And
right?
and I
So
think what goes along with that theory is the thought of how much of how much energy did it take to go out and mine this silver bar? So that energy is locked in this. And
yeah,
with the oil industry, I was looking at some research with that showed with a barrel of oil, how much of that oil is actually pure energy, because some of that oil is technically consumed in shipping it, mining it, getting it places. So it
right.
locks that human energy into this. And I think that's the big draw for folks on the physical stuff, because that energy is locked up versus, a piece of paper that could just be printed and deflated.
Yeah, there's no cost to make fiat currency is zero.
Yeah.
So it can go to zero. And I mean, the crazy part is crude oil went negative this year. So something that
I
actually,
know
which is
that is crazy.
so it is really weird because I remember we were all watching it, a whole bunch of traders and we watched it go, it was getting close to zero. I'm like, I don't, none of us, I don't think anyone really knew, or many people, what happens if it goes negative? Or we actually know, we didn't think it could go negative. We're like, it could go to zero, but then it went negative and we're like, what the heck does this mean? So, it really, it was an eye opener because technically, you say that there's energy value put into gold and silver, but technically we now know they can actually go negative, but that's on the spot market, totally different than physical.
Right.
So they're two totally different beasts, but it is a real eye opener to know that a commodity can actually be negative. Uh, I almost think it shouldn't be allowed to do that.
Yeah, and I saw some stories of some poor folks on Robinhood that had bought futures and ended up like owing some crazy amount of money. Now, thankfully, it got fixed, but one guy logged on and said he owed like $500,000 or $1 million just because of it going negative. So that's definitely crazy. But I think you're right. Just like when we saw silver running up and the spot market was saying 24 or 28, and you couldn't find silver for any less than 39.40. So although the paper market may say one thing, that doesn't actually represent, what's going on the ground.
Yeah, I think that the key is to know what the paper money is doing, like the paper gold and silver, the spot price. If it's trending up, you want to be owning it. If it's in a super cycle to the upside, you want to own it. Whatever the actual physical value is will always be different, but you're on the right side. You just want to be with the trend, right? And when things get lofty and there's these ridiculous premiums, I mean, that'll be the point where you start removing some of your metals, which will be a sad day because it's hard to sell a winning position, and it's hard to sell metals because, as you said, once you start holding one of those bars in your hand and
Oh
you
yeah.
hear the clunks and the sounds and you stack them,
Oh
it's
yeah.
very addicting.
Definitely. No, and I'm with you, man. And I definitely am planning to transition some of my metals in and out and into whatever's going on, at the time, to take advantage of that. But I say a lot of people stack for different reasons. I say I stack for retirement. So if very worst case scenario, I'll stack to I'm an extremely old man, then I'll use it to live on or pass on to my kids. Once I find
Yep.
a wife, I need to find Mrs. International Stacker. Still haven't found her. But having that mentality protects me from many different scenarios. One, if we have a crazy run up and I see an opportunity to shift it into another asset, I can do that. So if we have a real estate crash and metals are going crazy, I can shift it and buy, distressed properties that way. Two, if there is, like, a lot of people think there's like going to be a SHTNF scenario, like an apocalyptic scenario. If that happened, I would be protected against that. And three, just like a global economic issue. So I feel like stacking for retirement is the way to do it, because then you could take advantage of any of those situations that might
Yep.
occur, no matter how realistic they are or far-fetched they are from happening. So that's kind of my
Yeah.
outlook on that.
I think you and I touched on this last time we spoke too, is it would be pretty cool to be able to swap a bar of silver or gold for a house. Remember?
Oh yeah, that's like my ultimate dream, honestly. Here's a tube of
And
Eagles.
I've thought about it a lot actually. I'm like, you know what? If silver got up to $100 an ounce, I could totally buy a house. I mean, even for less than that, it depends where you go. A house or a condo, you can buy a piece of real estate, a physical piece of property. Swap your physical for physical, right? A different type. So it's pretty cool. And that was one of the cool things about having, like, 1,000-ounce silver bars. Like, geez, I can actually trade that block, that brick for something huge, like a house. It is mind blowing.
And if you ever do that, man, you gotta let me come film that. That would make an excellent YouTube
Totally,
video.
for sure.
Trading
We'll
silver
go
for
for
a
the
house.
silver bar house. We'll go searching for the perfect investment swap.
Cool, man. Well, thank you so much for coming on. I know everyone really loves listening to you and getting your perspective. And, I think the point you made earlier on the actual paper market, how crazy things can get. Folks, the US dollar, every currency is the same. It can be inflated, it can be deflated. So that's why it's important. Although I'm a very big believer in physical metals, and I know a lot of you watching are, it's not a bad thing to see the whole picture, see the sandbox we're playing in, and try to be more prepared for what the future could bring and try to take advantage of that when that happens. Because I've said to some of my family members, only a fool rides the market all the way to the top and then rides it all the way back to the bottom.
And that's what most people do, right? And they don't know when to sell. That's the tough part. When you've got a winner and you feel like you're on top of everything, I mean, that's when you need to be really digging in and figuring out, is this a point to be pulling money off? Because the price falls so fast
Yeah.
that if you don't have some preset expectations and targets, resistance areas that, this is the level that we should probably be trimming off some gold bars. I mean, you can give back so much money, and then you end up being bitter at yourself for a long time. Like, people are still holding from 2011. I've got a lot of followers that bought in 2011 and 2012, and I mean, they sat dormant for that long, right? And they're just back to break even. Whereas if you got out of it and then started to accumulate during the base or waited for a new bull market last year, you'd be like, you'd have all that capital floating around for free. You would have got your money involved right when it's rocketing higher. I mean, back when I started trading metals, I only traded ETFs back then. I was, that was 10 years ago. I was really young, not thinking I ever wanted to buy gold and silver. I mean, that was pretty extreme. I looked at it as a trading tool to make money. But then after the big bubble and it popped and started to come back down, that's when I'm like, you know what? I'm starting to see the value in physical metals. We had all kinds of fiscal stimulus going on back after the 2008 crisis. And I realized, this whole cycle that I just went through and I watched metals take off, it's most likely going to repeat, which is happening now. It's starting to repeat in a way bigger way. And so you definitely need to be into metals.
Yeah, and you know what? Just one last quick thing you reminded me of, like in emergency management, which for folks who don't know, I work professionally in emergency or disaster management. That's what I do, and something from that also transfers, I think, into this discussion. Whereas when everyone's running for the same fire exit or everyone's running in the same direction, if it's some sort of attack, you want to run the opposite way away from the crowd. And I think that kind of touches on the contrarian mindset to where
Mhm.
if everyone in your mom and all the commercials and everything's telling you something's a good investment, maybe that's a good chance to take a step back and start really examining it and saying, do I want
Yeah.
to continue this or do I need to take some profits or shift into another asset? What's your thought on that?
Yeah, I agree. I mean, I'm a huge contrarian trader. A lot of my custom indicators and tools, they all use sentiment. They use volume ratios. So I know when everyone's piling into one asset, when there's majority of people buying shares on the ask, that means everyone's buying and no one's selling. And if that ratio hits 3 or higher, it means different types of scenarios over the next 1 to 3 days. So I follow that. When everyone's rushing into a stock or rushing out of the stock market at the same time, when they're rushing out and that ratio spikes, that's when I get excited. I'm like, hey, this is a short-term oversold. Stocks are actually undervalued on a short-term basis. I can get in, do a quick trade. Gold and silver do the same thing. Every asset does. It's the yin and yang. You go from overvalued to undervalued, overvalued. The key is to just accumulate with the trend, and hopefully you got the mean average value or potentially lower than average value. And as it rises, you'll make money. So.
And the last thing I'll ask you, Chris, and thank you so much again for being on today. Is there any final advice you'll get for anyone who might be brand new to stacking or brand new to trading? Like, what's just some basic advice you'd give them?
To be honest, you're probably a more qualified stacker than I am. I just buy certain volume every year and toss it into my pile as just so I have it as a certain fixed percentage. I mean, I mostly like bars. I have a lot of rounds as well, 1 ounce rounds. Um, but overall, I personally do um, just rounds and bars. Like I don't buy coins or anything like that just because I want the cheapest per ounce, and rounds and bars are kind of that way that I see it. I don't want to pay the premium for something stamped with designs on it. That's just the way I think. I just go for lowest value. I'm just looking at it as an insurance plan and a swap of assets down the road where I can sell it and move that money to the next hot area, or more or less the undervalued area when there's a big shift.
Chris, are you telling me you're not going to get the International Stacker Crustacean Nation Pirate Crab Bar? Is that what you're telling me? That's messed up.
I should probably get one. I do have a couple random weird silver things, so it is interesting. But it's not. I go for the volume and just the simple brand name. So, but it's pretty cool.
I think the last thing I'll say, Chris, to everyone watching, is FOMO, fear of missing out, is a monster. Come up with a plan, execute it, and don't let your emotions take over to where you're like selling your baby shoes to buy some silver rounds. Take care of yourself, take care of your family, have a plan and execute it, and don't let those emotions take over. Would you concur on that?
Yeah, I agree. I read a book. My dad gave me this book. He gave me two books when I was young. One was called The Richest Man in Babylon, really old book. Super basic. It's like back in, I think like villages and stuff back in the olden days. And this farmer just saved 10% of everything he'd grow and exchange for money. And he eventually became the wealthiest man in Babylon, and which is this kind of town or this country. And that was a real eye opener, that this just, almost like a slave, eventually became the leader and a following, and he reinvested. And the other book was the Millionaire Next Door. It was the same theory: save just 10% of your paycheck and just try to put that money away. And if you lock it up into like a gold or silver bar, then it's harder for you to sell it. So you're not likely to go spend your savings. You'll end up just keep stacking it. And as your stack grows, you start to get more excited, and you'll probably start actually buying more. I like physical because it's hard to just kind of get rid of it. So I know a lot of people have trouble saving money, and it's tough because a lot of people shoestring budgets. You live paycheck to paycheck. But if you can throw a $10 bill away every week, it doesn't take much. You can just save up enough and then go put an order in for metals. And then once you've got the physical metals, it's not something you can just grab that $10 bill and go to the variety store and burn it. You've got this chunk. You'd be like, I wish I could go and spend some money, but I've got these metals. So it kind of forces you to save better, and it's a good asset, right?
No, I agree with you, because definitely if it's like actual cash, I'm more likely to spend it than if it's actually locked up in metals. Chris, thank you so much for joining us. I'm sure everyone liked it. Do you remember what we say at the end of these videos?
Catch you on the next one.
Woo! See you guys later.
One stacker.